I'm Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. Today, I have a great show for you. I am having Bootsie Jones on again. Bootsie is going to be generous enough to share with us his best setups. We're going to learn a lot, I think, in a short period of time. We're going to get some really good trade ideas. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading the CME Group event contracts. That's what we're all using at Place Your Trades. The PYT team is going to be in Las Vegas at the Money Show on April 24th through the 26th. So I hope to see you there. Congratulations to Corinne for winning that giveaway last week. All right. Hi, Bootsie.
Hey, Jules, how are you?
I'm doing well. And we talked about this just briefly, guys. If you see me keel over while Bootsie is talking, it's because I just tried to go long natty. So I like the low mid 2.5x region. So yeah. I'm giving it a go for a scalp. Don't be weird. Okay.
278 would be interesting. If you get a 278, that'll be.
Yeah. Well, right. So yeah. So I got in just in the mid 2.5s, and right now it's at the 2.585. So right now I'm green. If you see me keel over, it's because I tried to catch the natty knife. So Bootsie, I'm so excited to talk to you because I feel like I was one of your first followers. I think at least I was early, and then you've just blossomed. You have like such an incredible fan base on Twitter. People love your stuff, and they love it because it's actionable and it's useful, and you're nice enough to explain why you think something. You're not one of these that, oh, well, don't, people sometimes can be condescending on Twitter when they're sharing ideas, and they're if it doesn't go right, they'll just say, well, that's because you didn't understand it. But you explain things as you go. You're such a nice person on top of being such a great trader. So thank you for joining us.
That's very sweet of you. Thanks, Jules.
Do you want to share your screen, and then we can
Sure.
just start running through these, and let's get some trade ideas in here.
Yeah, so in the spirit of keeping things kind of neat and tidy here, because I know we have a bit of a time limit, I know you want to focus on setup, so I try to keep this pretty neat and clean here. So what I do is I look back to some trades of just this week. I wasn't going into the archives looking for my best stuff. I just said, this is stuff I posted live in real time at some point in the last 7 days. So that way it's pretty legit. And I know you want to focus on entries and setups. With that, what I've done is I've just done some notes on some screens. So for example, this is Disney, and it's a position I took on this week. Actually, I've had a bit of a core, but this is something I've been adding to. On the left, you have weekly, center daily. On the right, 4 hour. Those are the only macro large time frames I use. I don't really go into monthly. I mean, they're nice to look at, but they aren't actionable for me. So in this particular case, you had a really interesting confluence of 3 time frames with multiple relative strength divergences. So the market made a new lower low, but the relative strength, in this case, it's a 14 RSI, made a higher low. And in a medium term time frame, like a 4H, that's usually my go-to. I'll kind of dial it down at that point and really look for hard entries. Mm-hmm. And so from the 4H time frame, at that point, I'm probably about an hour. I'll look around the 1 hour time frame. But then actionable is probably 15 minutes to 3 minutes to get an exact entry, because at that point you need to control risk. On this particular screen, you can see a bunch of moving averages. I get asked all the time, what are they? The larger time frame ones are the 200 SMA and the 150 EMA. And I use the 150 EMA as a cross, as an indicator of basic trend. I don't use the 50 200 golden because it's too lagging. I need something that's going to tell me what the 200 is, what price is doing around the 200, not just what the rotation is doing. So I keep those two as almost a pocket set of moving averages. But the black one there is the 21 EMA, the 55 EMA, the 13 is on a couple of these here on the longer time frames. And yeah, those are Fibonacci numbers and they're EMAs. So they're much more actionable, closer to the current price, whereas SMAs are a little bit more of an average.
So let me ask a question. So you already had a position, you're kind of working your core here. How did you set an alert for the cross? Like, how are you managing knowing when to get into it?
I just actually looked at this earlier. I have about 250 different alerts currently live at this moment. And on any given day, I'll get 2 or 3 pop up. And then I'll know that at that level, when you go through, hundreds of charts a day, you start to learn, you start to know prices pretty well. It's just part of the game. Like, you really do have to have that 10,000 hours in, but you can't keep track of it all at the same time. So an alert, is a great service to have. So for example, on the bottom right corner here, this $86 level here, I would have had an alert sitting there. I would have had
how did you know to set the alert there?
So that was actually the first screen just kind of shows the larger picture.
Got you.
So this is a more, like I said, I want to go more recent. So when you dial into these and you kind of get down to a time frame where you have to pick an entry. I use the 3 minute and I use the 8 and a 34. It's the only time I use an SMA cross. This particular 8 and 34, it's got to be a short and an intermediate term. But after having done this since about 2005, I've found that the best, most reliable two are 8 and 34 cross on a 3 minute. So for example, you can kind of see these guys coming down. It doesn't show it too well on this chart, but the open was over here on the left. We're coming in. We finally crossed, and this was the entry. So the stop typically is the last place I see a buyer just before the break. So that's going to be right there.
I love that. So the bottom of the candle right before the break.
Exactly. So, and It's got to be green. So I want to know, in this case, where were the last supportive buyers prior to the break? Okay, where did these guys start, or gals? And then here's the high of the day. And I have this thing where I add to winning positions, because if something's on side, you can have multiple trails. So here's an example where it broke the high of the day. I added to it and I go back in. So this green candle here is going to be the stop. So that's now my trailing stop on both positions. And as you can see, it just kind of trickled up into the close.
Oh, so you do a trailing stop by then that dollar amount when you do the
So for that position. So if I have a desire to get a 4% position of my account, I'll typically start out with 2 and then add one. And then I can even go to up to 6 where I add one. If it's working and it's not stopped, I'll just keep adding and I'll just keep pressing it, because you just don't know where the stuff's going to go. And if you get a run, I could say, oh, I like $101.10 as my exit. Well, look what happened at $101.10. This thing just ripped, and I'm long. I've got 4 additional adds beyond the first 2. So, that's the thing with this game, is you just don't know where the stuff's going to go.
You never
know. And I've been saying it ad nauseum, is that you can only control risk. I can only control those stops. Mm-hmm. Because here's the thing. If that first entry rolls over and breaks down, who knows where this thing could go? And I don't need to ride that, into a black hole. And what I'll use, I'll show the next Disney one here. Okay. Which is number 2. So this is actually another good example. So here's even though it gapped down, there's no real entry signal. Now these 2 levels here, these 97s, these were support from in here. So I never got stopped out. Okay. So Disney pulled it, broke up to 100, then it pulled back in again. So I kind of now know that these 2 levels are pretty key levels. I have 2 buyers there, or I got a buyer there, I got a buyer there. So I have these on the chart. Those are those 2 lines. So I'm like, okay, let's see if these guys show up again. So they did kind of show it up. They false braked it, reversed it, false braked it, reversed it. They looked below. And on the 3rd try, they said, okay, we're done here. And as that happened, the 8 and the 34 consolidated. There was a cross and there was a large signal candle into the high of the day. So there's your entry. So you go back to the last place, which is right there. So there's my stop. So now I know that's the last place. If that breaks down, then you have a continuation. And if you look over here to the right a little bit, it actually never stopped out. So these supportive buyers sort of said to me, plus these 2 levels from a few days earlier, okay, this is a key level. There are key levels here. And then you go to the macro view, the 4 hour, the 1 day, and you're like, yeah, this is a little bit oversold. So let's just give this a shot here. Then you get up here. This was a fail to high a day. We broke through the high of the day. There's the last pullback where sellers are exhausted. So that's now my new trailing stop. So I have an entry in here somewhere, never got stopped. I have another addition here, never got stopped, and off we go. And you can kind of see the 8 and the 34 never crossed. They just kept going. They kept going. There was no sell signal. The sell signal in this case is once the 8 and the 34 cross on a 3-minute and that candle closes, it's done. So you have to exhaust the trade.
This is just scalping gold. So guys, this is the 3-minute chart. All that's on here is the 8 EMA and the 34 EMA. So two indicators, one chart. That sounds like a dirty movie. But this is just trading gold.
Yeah, so this is kind of like what I did when I was day trading. I would have 8 to 10 of these positions going at once. And, as soon as the 8 crossed the 34 and a 3, I was out. Back then, we could just automate the stops. You could just trail it. It was a little bit easier to do multiple positions. But now, if I'm going in for these positions here, like when I look at this thing here, and then now I'm assessing the macro view of the whole market, like I've gone from day trading to managing assets. So managing assets is like you have to put a position on. And when you get a confluence of large time frame plus small time frame, then you kind of start to factor in some of the macro fundamental economic things that are kind of going around. It's like, okay, maybe this is the time to put the hammer to this thing. There were no real great buy signals in the first half of 22. The second half of 22 had a few. There were no real consistent trendy type good entries. I try to think of something else that was kind of recent here. So Honeywell was one I kind of posted about. I was watching this one here because I knew that this was support. I had watched some of the buyers and sellers in this area. A lot of traders tried to short this, and then it blew through them and broke the downward trend line. What's kind of neat here on the 4H time frame, all the way down here, there were no divergences in RSI until you get back down to the exact spot that I kind of wanted. So I drew that bar on there. It's just a back test of the downtrend. So you have a couple of dynamic supports coming in there. You have a static and a dynamic support. Then on the bottom, you've got a really juicy 4H divergence, and it's pretty much all lining up. On a 4H divergence, you have to use the closes because RSI is drawn on closes, not on wicks. So now we have our 10,000 foot view. Now we try to very quickly focus down. This is why I picked that box. Actually, this is from the far left of the chart. So here's an example where it gapped up. They sold it down immediately. They closed the gap, and then you saw this point here. This was into the close, and then they gapped, and then these guys just had to chase it because they were short. So now you know that 189.96 and 189.84, that's going to get a test. So you put it on your chart. It's on your 3-minute. There it is here. These are the two bottom lines right there. Well, look what happened on the 28th of February. It came in and pierced that spot. And as the market does, it moves to the spot that hurts the most people. And that's exactly what that is right there. The 8 and the 34 have not crossed. Nothing has really happened. Even though I love that spot, you don't know that you could get a rollover and a plunge. You just don't know that, right? So right here is where the 8 and the 34 crossed. There's an entry. So I go back down and I look at the lowest spot behind that where the buyer supported, which happened to be right there. So in this case, I just moved my stop a little bit lower because it was a little bit whippy in the first hour. So nothing really happened. There's nothing really happening. There was a sell-off here, but it never got to my stop. It never got to the point where the sellers were terminated. Okay, so it just missed it by an inch. Then you come up here and you have another signal candle where the 8 and the 34 cross and price goes above. So rules are rules, you enter. There's the last spot right there where sellers were exhausted. And so now you have a new stop. So your stop has moved from here and it's moved up. And now you've got an entry of 2 positions. In this particular case, I'm buying for portfolios. So I'm not it's a 2% position. I'm not day trading this. So in this particular case right here, is where you would take the trade out if you were day trading it. Okay, if you had no 4 p.m. positions, there you go. There's your exit right there. But this is one I'm accumulating. So I'm waiting for buy signals. Now that's just me. That's not, if this was me 10 years ago, I would have dumped out and probably gone short right there. So here's the next day here, exact same thing. They sell it off the open, the 8 and 34 cross. There's a signal candle and a break above highs. So there's my stop. That's the last point. Sellers are exhausted and we're off to the races again. So
I love this. I love
that's
it.
sort of the intraday. That's how I did it for years and years. And, if you can control that risk, you're going to get slippage. Stuff's going to blow up in front of you, but you need to hit 4 or 5 of these out of say 7 of these really well, and you're golden. So here's a JPM one from this week. This is a 4H one. Again, this is old support 102 to 105. We knew that was a gap fill from way over here to the left. So you had a partial gap fill, but once that gap got filled, there was a really juicy 4H divergence. And as you go all the way back across the last several months, there wasn't a single 4H divergence. So now that you have that in place, plus a gap fill, you're like, okay, you start to dial in, where do I entry? Like this gives you permission to start buying, but you have to, again, get to a lower time frame. That was JPM.
I'm just watching you because I know you're just a consummate professional. I have to say you are so much more, I don't know the word, you're more sophisticated than I am in terms of your entry, and I freaking love it. I'm getting so much out of this because sometimes I'm just like, okay, and I don't dial it down enough, so this is,
but that's really okay. I mean, sometimes you were watching order flow. Like I just used to stare at the level 2 screen and watch the transactions and the size. And sometimes I'd have 2 level 2s. I'd have one for share transactions of 100 shares or less, and one for 100 shares or greater, or even 200, whatever it is. And you start to see where large orders start to flow, and you do that for 7 or 8 years. You kind of get a sense as to how that translates into a chart. I can only speak from experience when it comes to that. It's just like, had I known that staring at order flow for several years was going to help translate to charts, wouldn't be a chartist like I am now. This is actually one I was going to just show you quickly. This is Johnson & Johnson. That I was waiting for this, because this was an old high breakout, pull back and go. So I actually drew up a volume profile over on the left, and I only included the tradable prices that I was interested in to see where the pockets of air were, like where the low volume nodes, where's the point of control. And typically there's a little bit of this is kind of like a triple distribution, like a triple profile. It's actually quite balanced. But this low volume node, as you kind of come in here, it coincides with resistance and support. And I thought, okay, if there's a spot to get long, it's going to be in here. And so that typically is a very, very good place to locate an idea. They can act as support in this case, but in this situation, it blew through it and ripped right back out. So it's basically price rejecting that area. And so if you kind of dial in, what did that trade look like on a 3-minute? That's the support line. That's the line right there, that 151.31. This is just a couple of days ago, I think. Kind of blew through there. I didn't buy it there, even though I wanted to. And if I was day trading, I would have been parked there with a bid, and I would have just been like cowboying it. But I'm not doing that now. So I just kind of waited for the trade to set up, and there it is. So that didn't even take place till I don't even know if it was after lunch. There's the cross, there's the signal candle. I now know where the high of day is. This is pre-market. I don't really care about that. And off we go. So here comes the trend. My stop now is going to be right there. And it's probably in this case going to be static until we break high of day. So we broke high of day. I got another entry. So I work my way back and I say, where was the last place the sellers were terminated? That's right there. So there's my stop. And the 3 never crossed all the way into the close. So I thought, okay, because this is something I'm accumulating, we're going to keep it. And then you get to the next day, there's the open. This was a spot I drew this on because it was the high of the day. It was the opening range high. So I just draw that on. And we're going. There was no real cross. Now, had I been trading this, that would have been a pretty good sell there. This was another entry right there that I took. I might have misread this. Maybe it didn't cross. I can't remember. But there's another entry. And then we have a little bit of an intraday wedge here and another cross back up. So there's your 4th entry. So along this chart here in 2 days, you've bought there, you've bought there, you've bought there, you've bought there. The key point now is all 4 entries have a trailing stop, like right there. Typically, it broke high a day. So you could even add right there. Now I didn't because it was Friday afternoon and I might have been somewhere else. But that would be your 5th entry right there.
Let me ask you another question. It's a little bit off topic for this, but I get asked a lot from people who are looking at a particular stock that they're interested in. They take a position. They've got kind of what they have in mind as a target. They've got a stop. They're following their plan. They stop out, and then price gets back to where they entered, and they want to re-enter the trade. Are there a certain set of rules that you follow of when to get back into trade after having been stopped out?
Yeah, that's a great question. So I think I did that for the first couple of years I was trading, and I don't know if I've done it in about 10 years. I never, ever, ever will re-enter that price. I mean, 99.9% of the time, because the reason I entered it in the first place doesn't exist now. The structure is completely different. The risk is different. There are way more eyeballs on this thing now than there were before. I mean, if I'm on the bid and I'm parked there with some size and I cannot get a complete fill, I'm quite happy about that. That just means the sellers are exhausting, right?
Yeah,
and here we go. If I go back to that same price with the rest of my order, the probabilities of me getting run over are probably pretty good at that.
That they're going to do a double whammy, that they're going to get you again.
Yeah, exactly. I saw your post on the double dip, which I think is actually a very, very excellent video. I mean, if you guys are out there, go check out Julia's last video. The double dip support. I mean, that's almost an 8, like walking up to an ATM if you get one of those things.
I know. I couldn't believe it. I was like, because if you just wait and watch, like, because so many buyers bought that first gap fill, and they should have, because it's bullish. But then when it came back again and double dipped into that gap and then came back out, I was like, okay, that's super effing bullish. Like, I can't even get enough of this gold right now. Like, when that happened, that was like, yeah.
And like along those lines, I mean, you could say, well, Boots, why don't you just add more on the double dip? And the thing is, you don't know there's going to be a double dip until it's complete.
Exactly. You have to wait.
It probably hasn't tagged your stop either, so it hasn't gone below the original pullback. So
I added after the double dip was complete. I was mad that I caught the first dip, but then when it dipped again, I'm like, ooh, that's bearish. But then when it came out, I was like, oh no, that's because I thought they were going to screw the people that bought that original one. But then when they didn't, I was like, oh no, I gotta get some of this.
This was another 4H divergence just recently. Actually, this was from December, but what it did was it sort of set up the support levels. So you can kind of see in here what it looks like. There was no 4H divergence on this thing here. The other thing I find too is the big, larger cap stuff. When you get a 4H divergence, it catches a lot of attention, and you start to get a lot of eyeballs on it. So you can kind of see what happens as this thing kind of emerges out of that divergence. You get a nice little bump. And I wanted to touch on one more here. This was Taiwan Semi here just recently. This is one I've been eyeballing for a while. I have a core, but I've been wanting to add to it. So this thing went through the day, never really gave me the signal that I wanted. I put a red arrow here because there was a nice signal candle above both averages, but it never crossed. Like, there's no real cross in there. It was just a bunch of mess. And so once this one kind of came through, that was your entry right there. It was a much larger signal candle, and it took off. So again, you go back, you look at where the last point is prior to the break, where sellers were exhausted, which is there, and there's your stop. What's interesting is that impulse, it was like a bang, bang buy, because not only did it cross both averages, you got a new high of the day. And so it was actually a breakout. And so on that particular second entry, because it's so tight, and maybe this is a bit of the art form to it, you could probably keep your stop there for both. Because if that stop breaks, I mean, this thing is just going to crumble. So now you can see once this thing goes, it kind of goes. And there was actually no sell signal into 4 p.m. So that's probably a good signal to hold it. Right off the open, there is a sell signal. So you could unload it there if you wish. But as a day trader, you would have exhausted probably at 10 to 4, quarter to 4, 5 to 4 in there somewhere. So next day rolls around, right into the downtrend. You know where the prior day's high of day is. You know where the prior day's breakout is. There's the first one. So you're thinking to yourself, okay, I'm going to be a cowboy. I'm going to buy here. But there's no real signal that says you need to buy. So you wait, and look, breaks lows. That's great. So now you're waiting, and we're coming into a spot here where the 8 and 34 finally crossed. There's your signal candle. Now you go back again, reverse engineer. Where's the stop? Off you go. So the whole point of this slide here is, here's our second entry. So we broke highs, the opening range high. We broke that, pulled back, and took off. Now you've got a stop. You've got an entry here at 88 and change. Call it 2/3 your position. And it's Friday, so like I won't be adding 4 or 5 times. There's an 89. So your average price is in here somewhere. You've got probably, a really nice low risk entry because you were patient and waited for this. Like if you got in here, this probably would have shaken you out. So now you're going in here, you've reduced your size because you've got a bit of a scab on your knee. And so now you haven't minimized your risk by taking that first entry. So by being patient, you can do this. Now, this kind of stuff can apply to the opening range trade in futures on an applicable time frame with a different set of moving averages. But, the opening range high and low is another beast altogether. But
well, let me ask you another question. In all of our trading accounts, we don't have unlimited capital. We have a certain amount that we have to work with, right? One thing I try to do in my weekly thing is I try to figure out what is the highest probability so that I can focus on that first and then move down. When you have a bunch of stocks on your watch list and you have multiple setups happening at once, how do you prioritize? Where do you put do you sometimes trade some things larger than others? Is there like an exceptionally favorite thing? I mean, Yeah.
So I have a couple of watch lists that I They're just on the right hand. I have a few monitors here. On the right, they're all relative strength charts. So for example, I'll draw a chart of XLK to the SPY, and then I'll draw XLB materials to the SPY, and then XLV healthcare to the SPY. And then I watch these and chart these just as they were individual stocks. So healthcare, for example, has not seen too many dollars recently because it's just been really, really weak.
Yes.
Financials kind of sideways, but materials have just been like the XLB relative to the SPY chart. Okay, what's, for your Monday morning quarterback kind of analysis, you could say, okay, let's go inside XLB and see what's doing well. So then you can say, okay, I don't know, Freeport, without even looking at it. I imagine Freeport was blasting last week. And so there's a stock where I'll gravitate dollars towards. United Health, perfect short. You could say to yourself, XLV is relative to the SPY, very, very weak. The biggest component is United Health. Let's just start smashing that thing. So it's not going to see any dollars from the long side until it gets down to a level that I feel pretty good about. Right now, at this point, you just have to be careful because some of the torquier, higher beta stuff is, flying through the roof. But I mean, like going through charts all weekend, I mean, you kind of see things stick out a little bit. There is a lot of green. There are very, very few bearish charts outside of the US dollar and the 10-year bond yields doing something stupid. There isn't really much reason to be a bear right now. And
by the way, I want to congratulate you because you were on a Twitter space with me and Anthony Crudele, and we were both bullish at 38 and change.
Yeah, and that's the most uncomfortable I think I've ever been long ever.
I know.
Because the narrative was pretty thick, but at the same time, it's kind of nice sometimes just to turn that off. That's where I went from about 50 cash to about 98% invested.
It was terrifying though, because it was 2 weeks of like, will it or won't it? And we were on the third week, if I remember correctly, at the beginning of January. And I was like, you know what? It's either happening here or we're going way lower. So might as well take the risk. But congratulations on that. That was an amazing call that you made. I had one person ask me before we got on here, they had a question about bonds. Are you ready for their question? It is bonds ? So I think they're just going to ask you basically what your opinion is. Like,
okay, so I was a little early to the bond game. I never really traded much in the way of fixed income. I've always been an equity guy, but in the back, let's call it the last quarter of 2022, I looked at the portfolios. I bought more bonds than I have in about 17 years because I looked at a lot of these really, really highly rated instruments, like from a credit quality standpoint, very, very good companies, long run companies that are AA credit rated, and their bonds are trading in the 91, 92s, going out, 12 months to 24 months, call it. So I put a bunch of bond ladders together on really high credit quality instruments in October, November, on the first giant blip up on the 10-year. So when the 10-year blasted up there, I was like, okay, this is just so far gone that there's got to be something to buy. And of course, they lag a little bit. The switch now in real time has been into preferreds. So I've started really buying a lot of preferreds up to the last, call it 2 months or so. I've never even bought a preferred, but now I'm knee deep in them. So yeah, when the market tells you that, this is a place for you to divert your attention to, like these 2-year bond yields are, you can't even get the Amazon delivery guy to drop a package off without asking you about the 2-year bond yield. And at that point, you're like, okay, this is kind of getting ridiculous. But, if you go back and look at long run periods of those yields, they're really stretched right now. And I know the Bank of Canada kind of dances along with the US Fed. And at Macklem's last meeting, he said, we're raising 25 bips. And then the next sentence out of his mouth was, but we're going to pause. And he couldn't get the words out of his mouth fast enough. And the Canadian bonds didn't even move. There was basically no reaction. It'll be kind of interesting to see how these guys, because they're going to announce, I think Wednesday, I'm not sure. It'll be very interesting to see how they sort of interpret the latest data, like is January kind of a blip or not. To your original question, I don't think it really matters. I like bonds as a sleeve. Everybody's like, wow, I can get 4 and change on a 2-year. But where's the equity market going to be in 6 months? Is equity risk premium right now always going to be this constricted? Like, I don't know. It could be an anomaly. It could be a long run thing. But at the end of the day, this is a probability game, and I'm going to play the probabilities of equities, versus bonds.
I appreciate that. I need to spend more time understanding how all of the interactions work, because sometimes it seems like there's clear correlations, and then sometimes there's not.
Just to put some light on that. So what I did was I took in multiple different portfolios. I took about 15% of the portfolio, and I bought between now and call it 2.5 to 3 years out, probably about 15 different bonds. So let's call it every couple of months, a new one matures, and you've got whatever, you got 50K or 5K or whatever you got shows up, and you're like, okay, do I go buy the back end of this ladder and keep going, or do I divert it into equities? And at that point, it's a very dynamic decision-making process. So you're not locked into it, but at the same time, you're affording yourself the opportunity to make a decision every 2 or 3 months. I think it's a great way to dollar cost average through your portfolio.
Okay, I have to ask you another 2 questions from my friend Raj. Raj wants to know about what your opinion of Dixie is, the dollar, and also the 10-year, please. And he asked 3 times, so he really means business. He really wants.
Yeah, the Dixie's tricky because its biggest partner is the euro and the yen. So I think it's more, what do you think is going to happen to those 2 economies? Europe has a growth problem, and we all know that Japan's demographic problems, which I think are actually accelerating. So on that basis, and all this dialogue about Putin and Xi trying to get together to get rid of the dollar as the reserve currency, like that's not happening in my lifetime. I think it's the best house on the block right now. It's probably going to stay pretty firm. I don't see 2% inflation in the next couple of months. I mean, you could month to month, call it trailing 3 months, get into a point where you're at 2.25. If that's the case, the dollar is going to come down a little bit, but it's the best currency out there. The CAD is also very interesting because of the demand for resources and things. Where do I think the Dixie's going? I mean, I think the chart, to be honest, is unresolved. I don't think there's really, I've heard people say it's going to 150, and I've heard people say it's going to go into the toilet. I don't know. I mean, I think it's probably unresolved at the moment. If there was a signal on that chart, you'd have to be long. It's not a high conviction trade for me. The 10-year is probably done. I don't think we're going to get a calamitous rip up in the 10-year yields, but again, that's just me. I think about it from the perspective of the engine of the economy gets to a point where it can't really support 9%, 10% mortgages. And yeah, I know what happened in the 70s, but that's a different beast altogether.
Thank you so much. I just threw those questions in there just because people are such fans of you. They wanted to know your thoughts, and I didn't tell you ahead of time I was going to ask you that, but just because they came up with it. But thank you so much. I appreciate it. And I loved watching you today. I think the word I was looking for before was nuanced. You are much more of a nuanced trader than I am. So I learned a lot today. I now have great setups on the smaller time frame if I want to scalp intraday or build a position, because I think it works for entry no matter what, right? Whether you're planning on holding for a year or you're planning on holding for an hour, it seems like it's the same thing. So I love it. It's very versatile. And thank you so much for joining us, Bootsie. I appreciate it.
Thanks, Jules. That was a blast.
Oh, awesome. Okay. Well, everybody, if you want to follow Bootsie, he's one of my favorite follows on Twitter. It's at Bootsie Jones. We'll put it in the description here. And I'm at Cordova Trades if you want to follow me as well. And also, please follow Place Your Trades at Place Your Trades. All right, everybody. Thank you so much. I hope you have an amazing trading week. I am currently, I can't even believe I'm saying this, but I'm green on Natty. Oh my goodness. But I'm gonna lock in my profit real quick, and then we'll see whether or not I caught an actual bottom. But thanks, everybody. Bye-bye. Cheers.